session is Nickel Creek Platinum. The company is a Canadian-based mining exploration development company focused in the Yukon. The asset has 2 billion pounds of nickel, 1 billion pounds of copper, and over 6 million ounces of PGMs. Presenting for the company today is President and CEO Diane Garrett. She has a number of years of experience in the mining industry, most recently bringing the Halley mine of Romarco from discovery to construction. And I guess she's going to do this with this company as well.
Thank you very much. Appreciate the introduction. I can appreciate that I'm the only thing standing between you and the bar outside. So for the next 2 hours, I'm going to talk to you about, I will try to keep it succinct here. So Wellgreen Platinum is a deposit within a new company. You probably heard the name Wellgreen Platinum. That was our former name. We've changed the name now to Nickel Creek Platinum because it's a better representation of the metal mix within our deposit, of which we still call the deposit Wellgreen. It is a world-class asset based in the Yukon. We have 2 billion pounds of nickel, 1 billion pounds of copper, 6 million ounces of PGMs and gold, the platinum group metals, and 121 million pounds of cobalt. This is a staggeringly large deposit. But what makes it so unique and strategic is that being a polymetallic, you typically have trace elements of platinum and gold. Our deposit having 6 million ounces of platinum group metals and gold makes it extremely rare. So not only do you have the base metals component and the driver for the electric vehicle market with the cobalt and nickel and the copper for the infrastructure and grid, but you also have the precious metals component of platinum group metals and gold. And so we feel this is obviously a very unique asset. It's very rare to find significant platinum group metals outside the Western Hemisphere. Ours is an open pit deposit, which is also a bit unusual for platinum group metals. And we have 1-to-1 ratio platinum and palladium, which it's the only project on the planet that is not specifically platinum nor palladium dominant. So a lot of unique features to the project. Again, located in the Yukon, and we'll talk a bit about that in a minute. Obviously, the commodities for the future that we're seeing are the lithiums and the cobalts, but let's keep in mind that you cannot make a lithium battery without the nickel, that 70 to 80% of the component of the lithium battery is nickel sulfide. And we're seeing nickel prices sort of lagging the lithium and the cobalt because everybody got very frothy over those. But BMW and Tesla have publicly stated their concern is not availability of lithium supplies, but their availability of nickel supplies, certainly beginning within about 5 years. We also know the smelters are short on supply. There's been virtually no project generation in the space for nickel sulfide projects, and the nickel laterites and the nickel pig iron deposits are not suitable quality for the electric vehicle market. And we are a nickel sulfide project. We have a very significant institutional shareholder base led by Electrum, Strategic Opportunities Fund. Over half the stock is held in four key institutions. They understand and appreciate what it takes to de-risk a project and move it up the value chain. And we are very appreciative of the financial support they've given us and other support so that we can do the necessary work we've needed to do over this past year since acquiring the asset. The management team has a very strong track record of project development. Talk a little bit about those in a moment. There's a lot of information on this slide, but I'll just draw your attention to a couple of things. Elon Musk with Tesla says that our nickel battery, our cell batteries should be called nickel graphite cells because they're actually predominantly nickel. And the battery demand, as it relates just to the electric vehicle market, is about 40,000 tons today. And that is predicted to go to 450,000 tons over the next 5 years. So we're expecting to see a lot of growth in the nickel. And we're also hearing and talking to a lot of nickel traders that are saying you're probably going to see a bifurcation of nickel on the LME, that you'll have the nickel of the lower quality, like the laterites and the pig irons, that are suitable for the stainless steel industry be traded on one hand, and then the higher quality nickel sulfide deposits that are necessary for the electric vehicle market, which will command a higher price, be traded as a separate nickel commodity. So watch for that. That will be very interesting if we see that happen. And again, you want to be in the nickel sulfide deposit area for the electric vehicle market. There's been very, very little project generation over the last few years. You combine that with the urbanization of commodities, the demand that we're seeing worldwide for these metals, and then you add in these sudden shocks to the system like the tensions between Russia and the Western Hemisphere, and US and UBS coming out today saying that nickel, aluminum, potash, and copper are going to be very under a lot of pressure if these tensions don't ease up between those, because there could be additional trade issues from Russia, who supplies a lot of those commodities. And PGMs are predominantly produced out of South Africa and Russia. That's another, that's why the platinum group metals are considered a critical and strategic mineral. They're critical because very little is produced in North America, and they're strategic because they are used in defense weaponry. You have to have them for automobile catalytic converters. I'll get that out in a minute. And you also use them in the hydrogen energy production. So there's still a demand. When we see the BRIC countries moving towards more higher and higher emission standards, you're going to need the PGM metals for those things. China has said that by 2030, there will be no more combustion engines. Everything will be electric. So the electric revolution is here to stay. It's going to be a way of our life, and these are the commodities that you're going to have. We saw Sibanye out of South Africa acquire Stillwater Mining out of Montana. That's a clear sign of what's going on in South Africa and in the PGM community for them to go outside their borders. It's rare to have PGMs in the Western Hemisphere, and now if we end up with trying relations with Russia, or even more so than they already have been strained, you could see a lot of their production, which is recently reported as close to 40% of global supply, get constrained. So we've got an amazing combination of unique features about this project, given the variety of metals and the markets that they respond to. On a net smelter revenue basis, about 55% of the revenues from this project will be generated from nickel, a little over 20% from the platinum group metals and gold, 15% from the copper, and about 9% from cobalt. Now, 9% doesn't sound like a lot, but 121 million pounds of cobalt is a staggering amount of cobalt. You can combine a half a dozen or more of these junior cobalt companies and not have 121 million pounds. But because our deposit is so large, by proportion, the cobalt is smaller, but we will get paid for all of these metals. This is a picture of the Wellgreen project. If we overlay the deposit on top, it looks like this. There was a little bit of underground mining by Hud Bay. The inset picture is a picture of the portal. They mined about 140,000 tons of massive sulfides in the 70s, but then commodity prices collapsed and they left the area. Through the recent drilling that we've done, this is an open pit deposit, and that's the way we'll be mining it, with a very low strip ratio, about 1.2 to 1. When you think of the Yukon, you think of two things. Number one, mining friendly, great jurisdiction, government supportive, and number two, hardly any infrastructure, because the entire population of the Yukon Territory is about 45,000 people. However, we have the best road to our project, courtesy of the U.S. Army Corps of Engineers. It is called the Alaska Highway. And we are literally from here to the reception desk or the front door of this hotel off the Alaska Highway. So where you have a lot of mining projects have to build 60, 70, 80 kilometers of roads, we are very fortunate to have this. So infrastructure for us is really ideal. The yellow line at the top is the Alaska Highway. From the capital of Whitehorse, we are literally 2 right turns and 1 left turn, and you're on our property. Our base camp sits right at the edge of the Alaska Highway. Then we travel by a 14-kilometer all-weather road to the deposit site, which is up in the mountain there, but not really high elevation. Our camp is in the lower area because that way it can be expanded for production, and that's where our milling facilities will also be. From there, we then truck your left-hand side, we then take the material and we truck it down the Alaska Highway a couple of hours to the deep-sea shipping ports of Haines and Skagway, Alaska. And then we have direct route to market to Jinshuan, China, to Boliden's smelter in Finland. We can truck to we can train rail to Sudbury Complex, or we can go to Australia. So basically, we have route to market to anywhere in the world. As I mentioned, the Yukon has seen a lot of activity recently with all 4 of the major gold companies there, Kinross, Newmont, Goldcorp, and Barrick, and so it's getting a lot of attention. A lot of money is being spent in the Yukon. We are the only nickel PGM deposit in the Yukon, and we are one of the largest deposits in the Yukon. We're also the only project that's in close proximity to the capital, so the government's very excited about the economic benefit that they will feel within that area due to our project. Most projects are gold. There is 1 silver and 1 copper, but we sit very uniquely there. And talking about our shareholders, which is at the core of the real value of this project, because if you don't know any of us in management, then just look where the smart money is putting their money, and that should tell you all you need to know. Electrum Strategic Opportunities Fund owns 26%. Resource Capital Funds owns 11%. Drake Private Investments out of New York owns 9%. Tocqueville owns 5%. John Hathaway commented to me that, you know, he's really a precious metals fund, but he said, I think nickel is the place to be for the next few years. So we were very happy to have him join. Solway, which is the Russian smelting group based in Zug, owns 3%. High Net Worth, 24%. That's predominantly out of the United States and Texas. Insiders, 1%. We're a new team that's come together. We have been blacked out a lot, and we've not been participating in the private placement. We buy our shares in the market like you do. I bought 1 million shares when I joined. I purchased another 800,000 shares last November in the market, at market, no warrants, no discounts. So I buy the way you buy. And so our float is really only about 20%. We have a board that is representatives of Electrum and RCF, plus some additional board members. We have every area covered from geology, operations, engineering, governance, legal, and corporate finance. And I just take a moment about team, because when I used to be a fund manager at U.S. Global Investors with Frank Holmes, management was the single most important criteria before I invested in a company, because we had a saying that good management will make more money with a bad mine than bad management will with a good mine. So it's really all about the people, because at this stage of a project's development, that is the only asset you are investing in, because mining is not an easy business, but good people make it look easy. So we can forget me, but Joe Romagnola joined us. He and I worked together at Remarco for many, many years, a very successful company. James Berry was our chief geologist, which we stole from Barrick, and then he's joined us with this project. He understands big systems, and he has helped us immensely on understanding this geologic model. And then Heather White, who is a mining engineer. She was part of the design and build team, chief mine engineer for Voisey's Bay. She works closely doing due diligence with Electrum. She had her own consulting company. Because she had done due diligence on this asset, we hired her as a consultant to oversee our metallurgical test work. And she's been such an amazing individual, as she wanted to join the team and be further associated with this project. So I think that's a very significant testimony to the quality of what we're doing here. Heather also was responsible for Vale's worldwide nickel marketing. So very talented individual. Just in a nutshell, I can summarize this slide for you very quickly. This management came in just almost 2 years ago. We reorganized the company. We quickly decided to launch into redoing all of the technical work that had previously been done. We took everything to pre-feasibility or feasibility level. So that's redoing the geologic model, redoing the resources, validating everything, completing the metallurgical test work, which was a missing item. You have to do that first, because if you don't get the metallurgy right, nothing else will matter on your project development. Last year, we produced the highest quality bulk con that's ever been produced on this property. It was a very saleable concentrate at 14% nickel on the higher grade portions, nickel copper, and 12% nickel copper on the predominance of the ore body, the lower grade material. But we had bids from 3 smelters, so it's all about what's saleable, and our concentrate was very attractive in the market. Now we're doing some work on splitting the nickel and the copper concentrates. The smelters will pay much better if we can separate the nickel and the copper. It's a technology that's done all the time. We've had very good technical success. We've disclosed some of that in the recent months, and now we're taking it through a mini pilot plant starting at the end of this month, where we will physically separate those two, which will then generate the grade and the recoveries, and then we'll put all of that into our model before we update economics. So that will then take the metallurgy to basically feasibility level, and everything else will be at the pre-feas level from our technical work that we've done. So once we finish the phase 2 metallurgy in the orange box, at the same time we're doing the metallurgical test work, we're working on the mine plan, optimizing that, working on operating costs, capital cost, and then we'll be looking at wrapping up our economics and then making decisions to move towards pre-feasibility, feasibility, continuing on the engineering path, and take this project up the value chain by de-risking it along the way and getting it ready for production. The nickel in the deposit is represented here in blue. That's basically what it looks like, obviously a massive amount of nickel. The copper, we start seeing more of it as we get a few years into the mine life, but a very massive system. What we see here in the hash mark in the middle is the well-green deposit. That's the 2 billion pounds of nickel, billion pounds of copper, 6 million ounces of platinum and gold, and 121 million pounds of cobalt. And that is a little over 2 kilometers that sits within an 18-kilometer strike length land package that we control. So we all know, and I think Chris mentioned it earlier, that the best place to find a mine is next to another one. There have been about a dozen holes put in outside the main deposit over the last few decades, but it's never been tested beyond Wellgreen. We mapped on the geology all last summer. There's been some historic geophysics on the property. We're doing our own geophysics this summer, and we're going to be looking at testing beyond just the Wellgreen deposit. Wellgreen itself is a 20-plus year mine life, and we have not found the limits of it, but we also would like to test to demonstrate if we, in fact, are in a district. And some of the historic geophysics, you can just see the Wellgreen deposit on your left. That's the current known deposit. Quill looks identical to that. We do believe it's an extension of Wellgreen. Some of the areas that we've looked at historic drilling are higher in PGM content. Some look very similar to what we have at the Wellgreen. So we're very anxious to do our on-the-ground work and take a look at what we might be able to target in terms of additional material. And that's how you build value for your shareholders. So you get the right team in place, you have a world-class asset, you get a core shareholder base that really understands what needs to be done first to de-risk the project, move it up the value chain. You take it through the project development, and you get things that are beyond our control, as Chris said, which is metals markets, but you get those wins behind us, of which, by the way, nickel has reached its 52-week high a couple of times this week. It hit $7 today, and we're also seeing the PGMs flying as well. So we think this is the right space to be in. We certainly are appreciating the opportunity to present this to you. We have a lot of news flow and catalysts coming out over the next several months. So we hope you'll watch our news and what we're doing. Thank you very much.
We have time for one question, if there are any.
Yes, sir.
I'm just looking at the resource estimate at the back of the booklet there. How much of that is actually sulfide? Is it all sulfide?
It's all sulfide, yes. Excellent
so
question.
So it's not oxide then? None of it's oxide on the top of it, huh?
Correct, sir.
None of it has been oxidized, because you say it's open pittable, isn't it?
Correct.
Great, but it's all still nice and fresh, huh?
Absolutely.
Beauty. So.
How long do you think until you can start construction?
So if we look at the timeline of completing the feasibility, pre-feasibility, that would be roughly another 2 years. And then the government is telling us 2 years from permitting. You can decide if you think that's a fair number. We've looked at permitting projects in the Yukon, so it's probably realistic, but we all know how that goes. So you're, 4 to 5 years, depending on the permitting timeline, before you're in construction, and then probably 2 years of construction, which is exactly what we see as the sweet spot for when you're going to see these commodities really take off for the electric vehicle market.
I think that's the end of the session. Thank you very much for your
Okay,
presentation.
thank you very much for being here.